Welcome Investorholics, my subscribers, and welcome to all those new people to the channel. This is the ETF Spotlight Review. Today we're going to have a look at some more gold. We're going to look at GDX, which is the VanEck Vectors Gold Miners ETF. So GDX gives investors exposure to a diversified portfolio of companies involved in the gold mining industry. Investors might use this ETF to gain indirect exposure to gold prices through these mining companies, which are primarily involved in gold mining. Pretty good 12-month return. You're looking at 45.1% when I had a look today. Not too bad. Stick around for the rest of the video. Yeah, I mean, if you're interested in gold, looking as a hedge against uncertain times, this might be something of interest. Well, hello there Investorholics, this is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances. Expand your investment horizons and crack your financial sky. So, investment objective, the VanEck Vectors Gold Miners ETF seeks to replicate as closely as possible for fees and all that malarkey the price and yield performance of the NYSE Arca Gold Miners Index. The index is intended to track the overall performance of companies involved in gold mining industry. While we bother looking at it, this was the Australia's first gold shares ETF. Gold is a sector that has historically proved a hedge against extreme volatility in general financial markets. Pure play with global scope, index constitutes must be primarily involved in mining of gold. There's a few extra screens on that, so just to keep down the amount of things like silver and those type of things that they actually mine. Comprehensive portfolio, so a range of small, mid-sized and large global gold mining companies. When we have a look at the chart later on of the top 10 holdings, are all large companies, so you know, the smaller holdings are obviously the smaller sized companies. Potential for income and possible tax advantages versus bullion investment, so small dividend, and we'll have a look at that as we go along as well. Okay, so yeah, net asset value of $49.10, trading just above that at $49.34. Market cap just over $274 million. Management cost of 0.53%, maybe on the high side, but you know, this is kind of a specialized type of a play. You get a dividend once a year, typically late December, early January. Dividend yield is 0.53%. Investors might use this ETF to gain indirect exposure to gold prices through those mining companies, which are primarily involved in gold mining. This is possibly a better way to invest in the gold story rather than directly in a physical gold ETF. You get the hedge against risk that most people are looking for, along with potential individual company upside, so potential uplift from if one of the companies in the index does well. In addition, positive is that there's a small yearly dividend, which a holding in physical gold doesn't pay you, if I can actually spell right there. But you know, if you've got pretty much, if you own an ETF in gold, there's no actual dividend, but with this one, because it's with the miners, there's a bit of a dividend, and you also get the uplift with the gold price as well. The main holdings are focused on companies located in Canada, then the US, then Australia, then South Africa. You know, which gives the investor some good geographical diversification. If you're on the hunt for some different options, because we should be doing our research and checking as many options as we can to get an idea of what's actually out there, have a look at MNRS and also have a look at gold. Gold's physical gold ETF, so that's a bit different, but MNRS is a general mining stock as well, ETF. So you can see on the left hand side you've got in the top 10 there Newmont, Barrick, Franco-Nevada, Wheaton Precious Metals, AGNICO-EAGLE Mines, never heard of that one, Newcrest, Kirkland Lakes, which is Australian, and also listed in the Canadian index, Anglo Gold, Royal Gold, and Kinross. Looking at the performance, you know, if you bought it at inception, you probably wouldn't be too excited about that fact. You wouldn't actually make a lot of money out of it. If you had invested at the bottom of the market, you know, in say the 31st of December 2016, you know, you would have doubled your money and a little bit more. But I just don't think it's, like I say, it's not something for a long-term investment. I think this is one that, you know, if you're got some understanding of gold and how that is traded in the market or used within the broader financial system, this might be something, because you've kind of got to understand when the right time to get in and out is. That's something I'm not an expert on, and something I can't really be bothered having to research and spend the time on, so this is one that I wouldn't really be bothering with. Although having said that, in the last 12 months, as I kind of mentioned at the beginning, there has been a 45% increase in the share price. As you can see from the graph on the right hand side, there's been a big spike up from quite a large low, deep low. Obviously that was the end of March, end of February there, when we had that the big drop off in price because of the COVID-19 fears, but overall hasn't actually done too bad for the actual this year. But yeah, not one that I would really be chasing too hard unless you're a real gold nut. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.